pleased and honored to be selected by Fintech Galaxy to run the second Fintech FinFlare with my dear friend Kareem Aziz, all the way from Washington. So quickly, I'll just kick off the discussion with an intro on Kareem. I'll give you the floor, but Kareem Aziz is the global head of digital payment investments at the IFC, which is part of the World Bank. And today we will be talking, hopefully it'll be fun, we'll be talking about the leadership perspective on investing in the future, and what do we need to look at in terms of macro, global, regional, and what have you. Where are we heading? We have the COVID-19. What does the world look like before, during, and after? So Kareem, I would like to just start by welcoming you on board. And I'd like to give you the floor, maybe give us a quick idea on the IFC and the work that you guys have been doing as part of the World Bank.
Great. Thanks, Rami. Thank you to you for hosting this. Thanks for everybody for joining. Thanks for the Fintech Galaxy for organizing this in this very strenuous time for all of us. For those who are not familiar with IFCs, as Rami mentioned, is part of the World Bank Group. We are the investment arm, the private sector investment arm of the World Bank. We invest exclusively in emerging markets. We are one of the largest development finance institutions in the world. We invest around, last year we invested around $30 billion in emerging markets. We invest across the full range of sectors, infrastructure, finance, as well as the real sector. The Fintech team within IFC originated actually 10 years ago. So we were doing Fintech before even Fintech was coined as a term. We've invested close to $400 million over those 10 years. We've ramped up quite significantly over the past 5 years, as you can imagine. We've made close to 50 investments in total. We've got around 40 investments in our portfolio right now. We invest typically around $50 to $75 million a year in this space. And we are typically a Series B and above investor. So we invest at growth stage all the way through the later stage. I think some notable investments in the Middle East that may be pertinent to the audience are Fawry in Egypt, which was recently listed on the Egyptian Stock Exchange. We invested there.
That was
Yes, we invested there in 2012. Right after the Egyptian Revolution. We also invested in Network International, which was also recently listed on the London Stock Exchange. So we pride ourselves that we have a great team. We've made some great investments. We're eager to do more, and I'll leave it at that.
Excellent. So welcome aboard, Kareem. For the audience joining us, I see an interesting number of participants. Also, the views on the Facebook Live is increasing. My name is Rami, and I'm the Chief Innovation Officer at the Jordan Ahli Bank Group in Jordan. And I'm also the CEO of Ahli Fintech, a company fully owned and I co-founded as basically fully owned by the Jordan Ahli Bank Group, focused on building IPs around Fintech, software, hardware, and what have you. So building, investing, reinvesting, selling, and anything related to pushing the needle towards bringing Fintech into the into the region. And I'm pleased to have you, Kareem, today with us. Let's start with maybe a macro level global view on what's going on. So I'm sure you guys at the World Bank IFC have, I'm pretty much interested to hear what does the World Bank think about what's going on?
Absolutely. Well, I mean, I can't necessarily profess that I can represent all of the World Bank thinking around this, but what I can tell you is, at least from my perspective, I've been, as everybody has been, reading a lot, listening to a lot of analysis. And I think, to be frank, the conclusion, at least that I come up with, is a lot of people have very detailed analysis that basically say that they don't know what's going on.
Yeah.
There is, I think, to use a term Donald Rumsfeld once used, there are a lot of known unknowns and there are a lot of unknown unknowns. So we don't know. It first starts with the public health aspects of this crisis. We really don't know the epidemiology aspects of can people get reinfected, how many people have been infected. Testing is still very much limited in many of our markets, especially. We don't know if people can get reinfected afterwards. We don't know if there's going to be a second wave of this infection. Possibly everybody is anticipating that things are going to subside in the summer and then possibly reemerge in the fall. And the full extent of this is still not understood, at least from the public health aspect. The other unknown is how governments and policymakers are going to interfere and try to remedy this problem. When are they going to allow people to come out of lockdown? How are they going to allow people to come out of lockdown? Are all big questions that really have big economic impacts. What are the monetary and fiscal interventions that people are going to do, that these governments are going to do? Many of our markets don't necessarily have the ability to inject just the sheer volume of capital that's happening here in the United States with the 2.3 trillion that's being injected by the Federal Reserve. So there's a lot of unknowns in that regard as well. And then there's also the unknowns on how consumers are going to behave. So how are people going, when things are open up, are they going to go back to normal, or are things still, there's going to be a lot of social distancing, people are not going to engage? What are unemployment rates? How are they going to be affected? There's also the financial sector aspect of this. So, the impact on the financial services sector more broadly, their exposure to some of the underlying industries that are going to be most hard hit. All of these things, I think, lend themselves to just the conclusion that this is unprecedented, even going back to 2008, trying to compare what happened in 2008 to what's happening today. They're a very different dynamic. There in 2008, you had a financial crisis that was really focused on the financial systems globally, but really focused on that. You didn't have necessarily a situation now where demand and supply across all of the economies, almost 3/4 of the world, is in a virtual shutdown. And how to restart such a large global industries is going to be an experiment that we're all going to go through. And on a daily basis, I think we're learning more and more, and it will only, I think, it seems like, days are really the equivalent of weeks in terms of the amount of information that we're going through and the amount of changes that we're going through. I think that will continue until we get out of this.
Yeah, it's interesting times. So we're going through accelerated change. There's lots of uncertainty. I like the point you mentioned regarding trying to connect the dots between what happened in 2008 and today. So 2008 was a pure financial challenge that took place, while today there's a complete lockdown in the economy. And revisiting how would you move up the economy again is a totally different topic. Okay, so having this macro global vision, let's take it to a different layer now and look into a macro level view on VCs and investment, be it globally on certain regions, if you can put the spotlight on some regions that you look at as well.
Sure. So just by way of background, I originated my career and focused very heavily on the Middle East, and I continue to be responsible for the Middle East. So I have a kind of a bird's eye view on what's happening in the Middle East, but in addition to my global role on digital payments. So I can share a little bit on this. I think just the context of the previous question is the same with the investors. So many of the investors also don't know. So there's a lot of uncertainty on whether, this is a permanent shift. I think there's a lot of hope, I think, in the venture space, especially and specifically in the fintech, that valuations are going to come down to a more reasonable level. Business models are going to become a little bit more coherent. There's going to be less money chasing, few deals that, you'll be able to really make investments based on real fundamentals versus kind of the, I would say, almost hysteria that was going on, this or irrational exuberance, as Greenspan once said, that was happening before COVID. We saw the beginning of this post Uber IPO and post the WeWork IPO. I think if you listen to a lot of the investors in the market, they always reference, there's a lot of reference back to WeWork, even though WeWork, as it relates to fintech, is not necessarily a very direct link. But fundamentally, what was wrong there was this notion that you just spending for the sake of growth without really understanding the fundamental aspects of the business model and having structural problems in the business model is no longer going to be sustainable, or no longer going to be sustained by investors. And those are the most sophisticated have really pulled back to say, let's rethink the way that we were been doing investments. I think SoftBank and to a certain extent, Ant as a strategic investor in this space, Ant, which is Alipay in China, and financial, exactly, all had kind of an impact on the sector that caused a little bit of this hysteria. And I think now that that has subsided, we're hopeful that we'll be able to find and we'll be able to invest in more credible business models, looking at unit economics, looking at break-even points rather than before the kind of the vanity metrics, as you put it yesterday in our discussion, Rami. I really liked it, which is basically people presenting GTV, monthly active users, and using that to base valuations. But when you try to then model what the business would look like on a standalone basis when it would reach break even, I've seen business plans by backed by very credible investors that show gross profit margins at negative for 5-6 years out in a business plan. So even on a revenue level, you're not going to be making any money. So all of that, and I think globally, there is a rethink, and this is a great I think the investors are seeing this as an opportunity to rethink. As it relates to the Middle East, I think it's very similar. Although we haven't had necessarily, let's say, SoftBank type interventions in the Middle East, there's still, I think we were influenced a little bit about what was happening in the global markets. And I used to always get early discussions with a lot of founders who had very kind of unreasonable expectations on what their companies were worth, only with just a simple business plan. So that is changing. I think for many of the entrepreneurs and the founders in this space, I think this is a good opportunity for them to really really look at themselves in the mirror and to take a self-assessment on saying what are their strengths and weaknesses, and even shed some aspects of their businesses that may not have necessarily been sustainable, or pivot in this instance to and kind of almost attribute it to a COVID-19 situation. Not necessarily that they were going in the wrong direction. It was just COVID-19 that led to this. And I think investors will understand that you can hide a lot of your errors under a COVID-19 umbrella, and then hopefully rise out of it in a much more sustainable business. This is particularly important for those who have legacy businesses who have been at it for a few years and probably have been going in the wrong direction, but have been unable to kind of let go because they just wanted to show continued growth rates. This is the time to do that. I would also say, as it relates to our portfolio, companies, we've engaged with many of our portfolio companies from day one. We reached out to them. First, of course, we wanted to make sure that they're all safe and healthy, and they had mitigation plans to allow for their employees to be able to work from home. But as the second phase of this, we're really focused on spending. Cash preservation was really a key aspect. So making sure that you're rationalizing your CapEx investments, making sure that those CapEx investments are going to really lead to revenues and later, very soon, rather than there being a very long lead time. Many of fintechs rely heavily on other partners to generate revenue, and if those partners are not making those decisions, it may not make sense for you to make those investments upfront. It would be better to wait until decision makers are back in full gear and are spending again before you make those investments. Marketing spend considerably slashed, hiring freezes across the board. There's a lot of debate within the investment community on what to do with staffing costs, whether to reduce salaries and keep people employed, or to cut back on areas that are not necessarily core to the basic functions of the business. There's a lot of debate around that too. So that's just the general framework that everybody is in right now.
Excellent. Okay, so Kareem, I would like to start by reminding everyone with an IBM commercial that went out year 2000 that says, "Where are the flying cars? I was promised flying cars." So what was the fintech promise? And if you can give us a highlight, also a macro view on with some zooming in on fintech specifically. What was the situation like earlier? Today with COVID, what's going on, and where do you see the opportunities moving forward?
So Rami, look, the fundamentals in fintech have not changed, in my opinion. The promise of fintech is still very much alive, and in fact is even more obvious in this situation than it was before. What's so profound about the evolution and the change that fintech is having is that it is transforming the financial services sector from a vertical that kind of stood on its own to a horizontal, widely integrated into the lives of the consumers and merchants. And that transformation is kind of a once in a lifetime change that will never go back. So once you have finance integrated into the day-to-day activities of your life, that you no longer have to go to a bank or an insurance company to get your financial products, your financial services products and services are all integrated in your day-to-day life. Just think about the way that kind of you interact on an Uber application. You go into the car, you leave the car, the payment happens. That payment is a financial service that is being provided. And it may have integrated insurance, lending, if you're using your credit card, all integrated into one seamless experience. And we're seeing this over and over again that is happening. Now, that change is not going to happen overnight. That change is going to happen over a very long period of time. And we're really just at the tip of that iceberg in terms of those changes, because this requires a deep integration into all aspects of economic activity, working with partners, integrating into their IT systems, changing behaviors both on the consumer and the merchant side. All of that has yet to change. Sorry.
No, I mean, if you allow me, I'm sorry to cut you in,
yeah.
but so with COVID today, there's lots of, first of all, we've noticed the accelerated change. So maybe the adoption rate has expanded, went much faster. And what do you think, what would the impact be on that front? But also, as you mentioned, the new components, and I like to call them the infrastructure layers that need to come out, whereby you see this blend, call it conversion, call it cross-industry innovation, call it, well, there are lots of terms that are out there. Those layers need to become more solid and need to go out. And we need to see more of those coming in. Do you think, what's missing? What do we need to do to accelerate having more of those out there? Is it investment? Is it focus? Especially that the adoption rate of digital payments and what have you went to the roof. Everyone locked down, decided to automatically onboard on digital payments and what have you. So the behavior, I've known people who would have never been onboarded into any digital payment. They were all running towards digital payments just to buy groceries and essential needs and what have you. So what do you think? What can we do? What is required
absolutely
to jump in this opportunity?
Absolutely. I mean, that's what, so the context of what I was saying is that is the profound change, and COVID-19 is in fact accelerating that, not changing it. People, as you said, there's a significant move away from cash. People are seeing the limitations of cash. So consumers see, first and foremost, the limitations of cash in terms of their ability to buy online. You know, it's very restrictive. There's a concern, there's a health concern associated with cash, that it can transmit potentially the virus through cash. So people are trying to reduce their reliance on cash. There's also the availability of cash. You need to transport it. There's a heavy cost, especially when you have lockdowns. And governments are trying to reduce people's reliance on cash. So for instance, in the Egyptian government, the CBE mandated all of the banks to automatically enroll all of their customers onto mobile banking apps. So no need for registration. Everybody is automatically enrolled. Threshold limits on how much transaction activity you can do on these mobile wallets have all increased pretty much across the board, across the region. You are seeing much higher adoption rates. I mean, I can speak about my own experience with my own parents, trying to guide them through onboarding them onto a mobile wallet and teaching them how to do that. So, you know, customer acquisition costs and retention, I think customer acquisition costs are going to come down. You're going to see I think a big shift upwards over this period of time, where there's going to be adoption that are much higher than they were before. Now, the question then becomes, is this going to continue at that rate, or are people going to go back to normal? You know, and are these growth rates are going to be kind of one step shift upwards, and then we go back to a normal growth rates. I do think that there's going to be an inflation right now. People still, habits don't change very easily or overnight. And that's why you see a lot of these mobile wallets spending a lot to get people's habits to change. That I think is going to take a little bit longer time. But I think there is kind of that policy aspect is important, you know, getting the right policies out there to incentivize people to use these is very important. One other thing I should say, that we also saw the limitations on governments trying to disperse aid without having the appropriate infrastructure. So even here in the United States, believe it or not, there's a lot of debate on what would be the best way to disperse. Many people, they use the direct tax filing as one way, that if you submitted, or you had a tax filing that was done electronically, then they had their bank account information, then they can disperse. But otherwise, there's a vast majority of the people don't do it that way. And it's a real, policymakers in the United States are thinking about IT companies like Intuit, which operates QuickBooks, and companies like ADP that does payroll processing for a vast majority, and using those, what we would call a tech, but also even in the expanded term of fintech, they would fall a way of dispersing this type of aid. And you'll see that continue across the board.
Excellent. I have a couple of questions. I think we're very close to a wrap up, but I still have a few questions. Maybe we can go over time.
Sure.
I'll see what FinTech Galaxy will do about us going over time.
Yeah.
But so some of the topics that we always look at, especially with FinTech today, there was this love-hate relationship, tap dancing, if you may, between banks and FinTechs. Some embrace them, some love them, some attack them, some set up guards to stop them from growth and what have you. I think that was till a certain point of time, till today, where tech fins came up. So your Amazons and Googles and what have you, and Apples came in with a clear attack on both. So I'm just curious to hear your perspective on where do you feel this is heading? And today, especially today with such solutions, do you really build infrastructure layers, or would you allow the giants to step in and take over?
Yeah, very good question. So look, our definition of FinTech is really digitally native financial service providers, okay? But I want to stress that, you know, it isn't really about technology. It is really about a mindset change.
Yeah. Business model.
And a business model, you know, a change that really has to happen. If this was a technology, if FinTech or the value of FinTech was all in the technology, then the banks would have won this game a long time ago. They're amongst the biggest consumers of technology in the world, and have been technology, let's say, savvy relative to other industries for a very long time. But it really is a kind of a different mindset. One of the things that we actually discussed yesterday was, you know, like right now, many of the banks in this crisis are looking at the central banks kind of in a paternalistic manner, trying to make sure that the, you know, central bank is going to save them out of this crisis. Well, FinTechs, on the other hand, don't have that relationship with the central bank in the same way. They have to kind of think outside of the box, try to develop kind of products and services that really meet a real need, and are more likely to survive, and that creates kind of a tenacious, you know, a very stronger kind of business model than those that are more dependent on policy and regulation to protect them. Having said that, I think there is, and to answer your question, I think there is a shift that is happening globally. Before, banks dismissed FinTechs as kind of a novelty. Then we got into a stage where they saw them more as a threat. They started to, especially when you saw what Alipay in China was able to do in a very short period of time, and saw them as a threat, and didn't want to work with them and wanted to do them on their own. I think we're getting into a situation where banks are starting to come to terms with the fact that there is an opportunity to work more closely with FinTechs, that the FinTechs can be the enablers. Many of the FinTechs don't want to necessarily be regulated in the same way that the banks are regulated. And so would leave the kind of the regulated parts of the business to the bank, and leave the last mile connectivity to the consumer or to the merchant to the FinTech. Then there's a big question, and on everybody's mind is, okay, where does this go? Do the banks then become completely separated from the user base? Do they become disintermediated by the FinTechs, and the FinTechs have a lot of power? I think that this is not a winner-take-all type of model. I don't think regulators are going to allow for winner-take-all models to be established. And I think that there's a lot of room for everybody to have to kind of have a piece of the pie here. And and then, so that's I do think, and just one last thing, I do see kind of infrastructure, and that is really the core focus of our investments. So that was one of the core reasons why we invested in Fowry and Network International, that these players provide an infrastructure layer. And that infrastructure, in many cases, will be domestic. So I don't believe in this idea that an Amazon will dominate the payments in Jordan or in Egypt or in the Gulf, or that you'll have an Apple Pay that will be the dominant form of financial service providers. I think regulators will require that their financial services system be domestically owned. Apple Pay may rely on domestic partners, but I don't see the same way that you see with Visa and MasterCard. Visa and MasterCard in a big way are being kind of replaced for domestic payment infrastructure by domestic schemes like Visa in Egypt. Yeah, and TPP. So, Kareem, we're just preparing.
Sorry to interrupt you guys, but we have a lot of questions from the participants. So can we start with Jawdat Abu Hussein?
Mm-hmm. Are you giving him?
Hello, how are you? Thank you for you, Mr. Kareem and Mr. Rami. I want to introduce myself. I'm Jawdat Abu Hussein. I'm the founder of Trade Hub Joe. We are an e-lending platform worked in Jordan. I want to ask something about the SMEs, the small and medium enterprises, that I think the IFC plan to make a platform to link the SMEs to have financial services. As you know, this crisis, maybe it's interrupted for the SMEs because there is no cash, there's the need of finance. My question is, what is the IFC plan to serve this sector, the small medium enterprises? Also, if the IFC can work with any fintech company, have a ready platform or a ready application to serve this sector. Thank you for the meeting.
Thanks, Jawdat. So just quickly, so certainly the SME sector is a core focus for IFC. We are in the process of developing a kind of a $2 billion aid or financing program that would be developed to give working capital facilities to SMEs through banks. So a big portion of our portfolio as an IFC is with the banking sector. They are best suited to reach the SME sector in many of these markets. And we are developing financial products that can be provided to these banks so that they can provide working capital facilities to their existing clients in the SME sector. As a global institution, IFC doesn't work directly with a lot of these SMEs. It's very difficult for us to have a relationship with each one of them. So what we do is we try to invest through intermediaries. On the fintech side, we also invested in Fawry, as I mentioned earlier, which has a reach of 100,000 SMEs, and they provide working capital to their agent network. And that's the way that we would reach the SME sector.
As you know, Mr. Kareem, the fintech are specialists in many financial services. For example, there's a fintech in mobile wallet. There is a fintech in like LGs and LCs for the large corporate. Also, maybe there is an expertise in the e-lending work in the field with the SMEs. So maybe I suggest that the IFC have a good work with the fintech, to work with his developer, and the expertise in the field. You know, the fintech can acquire more SMEs also to serve this problem. You know, before the crisis, maybe all banks go through the retails for cars and mortgage, but now maybe all the work go through the finance for the SMEs. Maybe this is the number.
This is precisely why we invest in fintechs, and that's why we've been doing it for the past 10 years, Jawdat. I think we have a portfolio of 40 companies. They're all very specialized, and it's precisely to reach. The overriding objective that we're trying to reach is to extend financial services to those that are under-penetrated or underserved by the traditional business models.
Bringing Wahida now online for the next question.
Hi, I'm in Mombasa, Kenya, And my question is, what will happen to Sub-Saharan Africa? We already have very little investment, especially in Islamic fintech. Are investors going to shy away?
This is a very good question, Wahida. I think probably, as I mentioned, more globally, there is certainly a push by investors to go into less risky markets that they're very familiar with, especially under this context. So what pre-COVID-19, I think, because of all of the dynamics that we had, that I mentioned before, there was this irrational exuberance in the market. People were chasing too few deals. There was kind of an interest by many of these investors to probably look outside of those core markets and to look at other untapped markets that may not necessarily have such high competition from investors. And Sub-Saharan Africa kind of is one market that I would say benefited from that. Post-COVID-19, I think in the short term, you may have a retraction. People will probably hold back until they see the full implications of what this is going to do. They may make investments in more mature markets at better valuations. And so you may see a retraction. But fortunately, in Sub-Saharan Africa, I think there are a number of investors dedicated to Sub-Saharan Africa, focused on venture. We, as IFC, invest in them. So for instance, Partech is one example based in South Africa, which is a Pan-African venture capital investor. We also have an investment with Helios. It's a later stage investor, but also focused exclusively on Africa. So I think increasingly, even while there may be a short-term blip, I think over the medium to longer term, certainly there's a lot more attention being paid to Sub-Saharan Africa.
Excellent. I'm putting Shadi online. Shadi, please, you have the floor. You have the question.
Yes, thank you very much, Rami. Actually, my question was about digital currencies. I mean, after the Corona or the COVID-19, people are talking back about the potentials of digital currencies, and they might be a way out or a solution for all the hiccups that we've seen, especially when it comes to supply chains. So I don't know what's your perspective over that.
I think the promise of digital currencies are still somewhat unclear and probably overstated in the short term. I think there are, at least what has happened in post-COVID-19 is many of the central banks, even in the United States, the Federal Reserve as well, are thinking about digital currencies, their own digital currencies. But there's significant economic and policy implications of these currencies that yet have to be worked out before they really get a mass adoption. So I would say, it is still not clear to me, at least, that digital currencies really have a profound use case in the short term that really justifies kind of, if you talk about the cryptocurrencies, et cetera, justifies what the speculative behavior that is happening on those exchanges.
Excellent. I'm giving the floor to Khalil Alami now. Khalil, I'm trying to unmute you.
Hi, Rami. How are you? Nice to see you as well. Kareem, thank you so much. Long time, yeah. Thank you guys. Thank you, Fintech Galaxy, for this great, webinar or conference, online conference. So, Kareem, I have a question that's kind of, just straight on point. So, as the head of digital payments investment at the IFC, the question is two parts. So, would you invest currently today during this situation in a fintech? I know fintech is quite broad. In a fintech not necessarily startup, but a fintech company? And what kind of fintech company would it be? If yes, if no, then why? And if yes, what kind of fintech company and into which country? Or is there a specific country or in general?
So our mandate hasn't changed, Khalil. Our mandate continues to be in emerging markets. We focus on 4 verticals within the fintech landscape. So payments, lending, insurance, and capital markets. And that basically covers the full financial sector. But within each one of them, you have fintech companies that are, as kind of the earlier comment was made, they're very specialized fintechs that are trying to tackle a very narrow aspect of it and are doing it really, really well. So that mandate hasn't changed. IFC prides itself as being a counter-cyclical investor. So we like to invest in these times. We prefer, and in fact, last year in 2019, we had 8 exits. So we were counter-cyclical on the upside, and we want to be very counter-cyclical on the downside as well by making these investments. But so that's one. Second is, in terms of the stage, our mandate hasn't changed either. We are still very much naturally suited to be a Series B investor and above. So these are companies that have already are generating revenues, have already done a Series A, probably financial round with financial investors, and are looking for capital for growth. These are not companies that still are a business plan, pre-revenue, proof of concept, that are better suited for more local investors to make. So we're still very much in that eager to do those. I would say the one thing that has changed, which would hold us back from making investments, is really valuations. I mean, it's very hard to really pinpoint where valuations are. Many of the founders are also reluctant to set valuations based on a distressed period. We really don't know, as I mentioned in the beginning, we don't know where the outcome of all of this. So what you're seeing more and more is that these investors are really thinking about more convertible type of notes, possibly putting in money without setting a valuation, and setting valuation after things subside. For us, I think we're open, but this could be a big factor that would hold us back. But we are really going towards the companies that we've known. So our pipeline just doesn't, it doesn't happen overnight. We don't take a look at a business plan and then all of a sudden make an investment. Our pipeline really is based on relationships that we've nurtured over a long period of time. We get to know the Series A type of companies. And then after getting to know them, for instance, in Fowry, we got to know them very early on from inception, and we're able to make an investment when they got to the stage that we were able to make. So we're very much open for business, Khalil, eager to get to know more opportunities in the region, especially in the Middle East, and in Sub-Saharan Africa, actually, to Wahida's earlier point. We're also very eager to do that.
Great, thank you. But if you were to pinpoint a certain sub-segment of fintech, what would it be? If it's, what's, pardon the term, but what's sexy right now?
Yeah, so we don't do sexy. We do boring. Okay, we like boring.
Investment perspective. I mean.
Yeah. We like very boring businesses that nobody else wants, but are building the infrastructure that will stay for a very long time. Fowry, when we invested, while it may be sexy now, and to a certain point, a lot of people actually don't think Fowry is very sexy even now, but Fowry has a very sustainable business model, has laid kind of the infrastructure for payments in Egypt in a very deliberate manner. And those are the types of companies that we're very interested in. We're very interested in infrastructure-like companies, as Rami mentioned earlier. I think that term really resonates with us, and we really want to see infrastructure in payments, infrastructure in lending, infrastructure in insurance, and infrastructure in capital markets. Capital markets and payments are very much infrastructure
centric. Yeah.
Centric.
That's good. Thank you very much. Take care, guys. Thanks.
Thanks, Khalil. Kareem, I want to close with a closing question, if you may.
Sure,
and
sure.
Follow up on Khalil's question. We talked about unit economics and what's the shift, and I would like maybe if you can zoom in a bit on some advice to both investors and startups on what does the unit economics look like now in this post-COVID phase. We know lots of businesses went through very hard issues because of the lockdowns, yet other businesses like Zoom and the Netflixes and what have you, some went 20x, 30x in terms of growth just during this period. As you mentioned also earlier, lots of the ventures that were fully funded and supported maybe were focused more on market share and what have you, yet there was no substantial clear feasibility if you go down to the clear unit economics. So what would maybe your final closing advice, and I'll ask you on a general advice as well towards the end, but specifically on unit economics towards both investors, what do they need to look at, and startups?
I think that it's both. It's the same for both, to be honest with you, Rami. And this is a very good question. And unit economics is a very kind of, let's say, subjective term in the industry. But fundamentally, I can give you just a contrast of what it was in the past and what I would say is going forward. In the past, let's say, particularly on the B2C businesses, those that were, let's say, the mobile wallets, those that were kind of spending heavily in promotions to get people to adopt the mobile wallets, okay? So they had a very high customer acquisition cost, and then they had, and their main metric that they were trying to achieve was monthly active users. So how many monthly active users we had, irrespective of whether these monthly active users are going to stay on for the lifetime and become continue recurring users or not, it didn't really matter. People were just paying really large amounts of money to get monthly active users to first onboarded, registered, transacting, and then keep them engaged. And what you saw in business models often, that the return on that investment that you made to acquire the customer and to retain them really didn't have a reasonable payback period that you could say that this is going to be a profitable business. And what it attracted was deal seekers that were, and this is probably not necessarily a lot in the Middle East, but more globally, you'll see that there's this hyper competition for the consumer that was leading to consumers at the other end using these apps for getting the best promotions that they can get, but never really being loyal to any one of them. And I always used to attribute it, I was saying, if you're paying people money to join your app, and then you're paying money to people to use it, then you're not really addressing a real pain point. You're not solving a problem for them. You are paying them.
You just nailed it with a,
yes,
with a clear
exactly.
statement.
That's right. You are paying them to overcome the pain of using your wallet and your app. That's the only logical explanation that you can come to. That mindset, as it relates to unit economics, in this new reality is changing. Now it is, okay, what is the revenue per user that you're generating? How much is the cost of acquisition? Of course, that still is, retention still remains. How much revenue? What are the payback periods for that user base? And what is the churn rates also is a kind of a very important aspect of this. And these are, and path to break even. So you'll hear path to break even over and over again. When do you break even? And I think increasingly investors are interested at the earlier stage, are interested to understand that you're solving a real problem. They may not see the path to break even yet necessarily yet, but they really want to acutely understand the problem that you're trying to solve for these people, for either the merchant or the consumer. On the other hand, when it comes to a later stage for us, it is really becomes, okay, you've solved that problem, but how long will it take for you to get to break even? And that, to me, is the new framework that both investors and founders should be really basing their business models on.
I love that. I think we're over time, I know, but I think we're out of time now.
Great. Yeah.
So I would like to start by thanking Kareem for joining us all the way from Washington. I used to enjoy saying all the way from Washington, but we're all connected now, so there's no all the way.
That's right.
And I would like to also thank Myrna and the amazing team at Fintech Galaxy for setting up those flares. And I'm pleased and humbled to be the host for Flare 2 with the amazing Kareem Aziz from IFC.
Thank you, Rami.
Everyone. I hope you enjoyed it as much as we did. And looking forward to joining further flares if you may. Thank you and have a good day.
Thank you, Rami. Take care. Thank you, everybody.